Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:04 a.m. Central Time, and I am recording this for preparation of the market day of February the 11th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Well, let's take a look and see what happened in our overnight action. We are scratch to just slightly down, with the Russell being the weakest at down about 0.3%. Really, the other markets are negligible, and really nothing to be made of that. Crude oil is up a little bit, about 2.5%. Euros also scratch. We'll also say bonds are essentially scratch, slightly up, and gold pretty much scratch. So very little action in the U.S. futures overnight market. In terms of our overseas primary markets that we watch, China up 0.5%, Hong Kong down 0.87%, and Europe down about 0.3 to 0.4 in Germany and the United Kingdom. So perhaps a little bit of weakness coming in to our open today. The macroeconomic reports for today, not too much on the slate for today. You do have crude oil inventories, of course, as well as a 10-year bond auction. So if you're in the bond trader, that one could stir you a bit. And then tomorrow, of course, Thursdays are always more active, but you have a number of reports before the day opens. You have core retail and retail sales, and then of course unemployment claims, the weekly report there. Natural gas storage as well if you're into nat gas trading. So fairly quiet this week thus far, and a little bit more activity tomorrow, but nothing really to get terribly excited about. In terms of current volatility, obviously we've been flip-flopping back and forth above and below the VIX 18 level. The short-term VIX now, with yesterday's action, did drop to a 15.20, and you see historical implied volatilities all kind of around normal mid-level, so nothing really to get too excited about. Also, in terms of range action, our standard deviation moves, we had 3 of the 4 markets with a standard deviation move yesterday. That was to the top side, of course, but in general, we have been quieter in recent days than we were in the previous trading week. So really kind of coming back into more normal kinds of conditions here in the last few days. And from a daily report standpoint, we have a number of changes here today, a number of important changes, so something to get updated on here for sure. We have flipped the market trend intermediate term phase opinion back to phase 3, and we've been going back between phase 3 and phase 5. Phase 5, of course, being a break of support. Really, I kind of thought for a while as to whether this should be 3 or 5, and I think you can make a case for either. We are still inside the range. We have not broken range, and until we really break this range, many of these definitions are not terribly a tight fit. But since we are clearly changing our postures and other metrics are coming in line, I felt that phase 3 was probably the more apt description of this. We do have a new portfolio trader posture today. Uptrend resumes, and so that does lessen our risk level, and I'll get into that in more detail in just a moment. Active trader market posture is also bullish. Our market opinions on position sizing. Both definitions have also been increased as a result of these changes, with buy long side portfolio exposure up to 100%, and from a volatility standpoint also going back to the up to 100%. Now I would give a caveat here. These are, and I'm reminded of the statement of, you know, trade what you see, not what you think. And I'm having to be pressed on that mantra today, because I still feel like we are range bound and have not broken the range, and yet so many of my metrics are, you know, signaling, you know, all's good, all good to go, full steam ahead, kind of bullish markets kind of things. And certainly if we break out of this range in the next few trading sessions, it would seem that the various indicators that I use have signaled appropriately. If we simply tickle the top of the range and then come falling down hard the next 3 or 4 days, then my gut feeling and caution would be validated. So which way is it going to be? We just don't know at this point. But I have to say that given that we have failed to break this range now for 3 months, I am still pretty cautious in terms of my new initiation of positions and the position sizes that I would use on those new positions until we get something that is a more clear break. But I wanted to report to you, what the indicators are saying. You make your own judgments as to what's appropriate for your own situation. And that being said, just to have a little bit of caveat that, my own judgment and opinion here is to still remain somewhat cautious. Market timing opinion, actually I should have changed this 1 day outlook to neutral, but 1 day and 3 day are both neutral with a slightly bullish 2-week outlook. From a market posture, all 4 indices are fully bullish, and new short-term and intermediate term bullish trades are all signaled to be absolutely okay from that aspect. New warning status here, we have dropped this down half a notch to a 0+, 0 being normal. And I've got a little plus on there because we still have a number of indicators that are stressed, and notably the number of distribution days. We have 6 distribution days on the S&P and 5 on the NASDAQ. We also have had this VIX phase flapping back and forth. We're calling it neutral right now. It's really hard to call anything of a trend on almost any chart that you look at right now. Pretty much everything is flat lines, and moving averages are flat. All these trends are flat as they've been ranging, and so really hard to call anything bullish or bearish in a strict sense. From our intermarket indicators, they're all risk on. They're all saying it's a go and no problems at all. From an option income strategy, today the VIX is the first day back inside the acceptable window, but keep in mind that it has been indeed flip-flopping back and forth above and below that 18 level. Like I said, on the trend phase table, we've gone back to phase 3. Members, you might want to dig into the definitions here a little bit more and study this chart. We won't spend the time on the morning video to do that. In terms of our market postures, again, remember flat lines obviously looks a lot better. This is a wash and green. Utilities, obviously being the weakest, and remember we've been talking in recent days that we might be something of a sector rotation going on with utilities and healthcare, maybe taking a bit more of a hit, where more money is pouring into things like financials, energy, and materials, sectors that up till recently had been hammered. So we'll continue to see how this sets up in the next few trading days. But from a market posture standpoint, really, it's a very pretty green all good to go almost across all sectors and all time frames, with the one exception being utilities. Sector percent change yesterday, obviously good strong day. Now you see utilities did bound up yesterday, and healthcare also did bound up yesterday, but that was after really taking quite a hit in recent days. So we'll continue to watch this. Obviously yesterday actually energy was once again the weakest sector. And I think that's it for today. I don't have the industry groups on here today. Bottom line, it is a situation where we want to exercise caution, but we should certainly be moving from just watch list on bullish setups to maybe taking some action and perhaps taking a reduced position size, watching those targets, taking profits quickly, as well as taking risk off on our stops also as quick as is appropriate. So engage, be active, and yet at the same time have a little bit heightened sense of caution in the current market environment. If you like what we're doing here, as always, greatly appreciate you liking us, telling your trader friends about us, and sending them to us on any of our social media platforms, whether it's liking us on the YouTube channel or sending comments into our Facebook page. And then of course you can always send in questions or support or other commentary to support at falconglobaltraders.com. More information is available on the website. Disclaimers as usual. Hit the pause button if you need more time to review this. And of course, every day we appreciate you in our Falcon Global Trader community. Good trading and good day.